When we think about investing, it's so easy to get obsessed with the markets, with the news, with all the stuff happening out there. But what if the single biggest factor for your success isn't out there at all? What if it's right inside your own head? Today, we're going to dig into why mastering your own psychology isn't just a part of the game. It is the game.
And hey, don't just take my word for it. This is from Benjamin Graham, the absolute legend, the guy who basically wrote the book on value investing. He knew decades ago that our own emotions, our greed, our fear, are way more dangerous to our money than any recession or market dip. This quote just perfectly sets the stage for the battle every single one of us has to fight.
So that's the million-dollar question, right? If we're the ones sabotaging our own success, how do we stop? How do we build a system that protects our hard-earned money from ourselves?
Luckily, we've got a guide. This is The Laws of Wealth by Dr. Daniel Crosby. And what I think is so cool about this guy is that he's a psychologist and an asset manager. He literally works at the crossroads of money and the human brain. So his book isn't just theory, it's a practical playbook for how to win the inner game of investing. All right, let's jump into his first rule. And it sounds so simple, but honestly, this is the bedrock for everything else. It all comes down to controlling the one thing you actually can, you. Look, you can't control what the Fed does, or what happens with global supply chains, or whether the market goes up or down tomorrow. Trying to is just going to drive you crazy. But what you do have total 100% control over is how much you save, how you manage your spending, and most importantly, your decision to stick with a plan for the long haul. That's where your real power is.
Okay, moving on to rule number 2. And this one, this one goes right after an entire industry that's built on making you think they have a crystal ball.
This is wisdom from thousands of years ago, and it's never been more true. The smartest people in the room aren't the ones telling you what the market's going to do next week. They're the ones who know that you can't know. Real knowledge is admitting that the future is fundamentally unpredictable.
And this isn't just some old saying. It's a fact backed up by some serious research. One massive study tracked thousands of expert predictions over years and years and found they were basically as good as a coin flip. So let me ask you, if the so-called experts can't do it, what makes us think we can?
So instead of trying to predict the future, we should understand how things tend to behave. And a huge concept here is mean reversion. All it means is that things don't stay crazy forever. When a stock is shooting for the moon or when it's crashing into the ground, those are extremes. And eventually, things tend to drift back towards the average or the mean. A perfect real-world example of this is the Sports Illustrated jinx. You've heard of it, right? An athlete gets on the cover and then their performance tanks. Is it a curse? No, of course not. It's just mean reversion in action. They got on the cover because they were having an unbelievable peak performance. It is almost statistically guaranteed that they can't keep that up, and their performance will naturally come back down to their normal average. It's not magic, it's just math.
Which brings us to rule number 3, and this one gets to the very heart of the matter. We're talking about the engine that drives almost all of our bad decisions, our emotions. Think about it. Your mood is like a filter on reality. When you're happy, feeling good, everything seems possible. You might get overconfident and take on way too much risk. But when you're scared, every little market dip looks like the end of the world, and you miss out on huge opportunities. The key is to realize that neither of those feelings is reality. They're just your brain telling you a story.
So, we've got these 3 rules. Control yourself, stop predicting, master your mindset. Sounds pretty straightforward, right? Well, here's the problem. There's a huge canyon between knowing what to do and actually doing it.
Psychologists call this the knowing-doing gap. It's that frustrating place we all live in. We know we should buy when the market is down, but our fear makes us sell. We know we should stick to our plan, but our emotions hijack our brain and we make a rash decision. It's the gap between our smart brain and our lizard brain. And here's the perfect analogy. The doctor who smokes. They have literally all the knowledge, all the facts about what it does to your body, but that knowledge isn't enough to beat the habit. That is the knowing-doing gap, and every single one of us has a version of that when it comes to our money. So, how in the world do you cross this gap? Crosby lays out 2 simple but powerful steps. First, own your behavior. Go back to rule number 1 and just focus relentlessly on what you can control. And second, and this one's a game changer, enlist outside help. Admit that you might not be able to do it all by yourself. So does getting that outside help actually work? I mean, can you put a number on it?
You bet you can. And that number is a pretty big one. It's 3%.
Yeah, research from a little company called Vanguard, you may have heard of them, found that working with a good financial advisor can add on average up to 3% to your returns every single year. They call it the advisor's alpha. And get this, the most important part, that value doesn't come from picking hot stocks. It comes from behavioral coaching. It's having someone in your corner to stop you from making that big emotional mistake.
And that really is what this all boils down to. It asks us to flip the whole script. We spend all this time thinking about how to manage our investments, our portfolio, our assets, but the real work, the work that actually builds long-term wealth, that starts with managing the person in the mirror. And that is the best investment you will ever make.